Years ago, when I was a financial advisor, there's one phrase that caused me to cringe, and that was buy the dips. And I hated it. I hated hearing that. I hated listening to CNBC or weekend talk show radio, AM radio with these financial talk shows. And invariably, somebody would get on there and they'd say, buy Joe, just buy the dips, buy the dips, buy the dips. And I hated it because it's not a bad piece of advice. It's too simplistic, and I think it sets up people for failure if they don't know what they're doing. Hi, welcome to Ocotillo Mining Company, your source for premium gold and silver bullion coins. And today I just want to go over why buying the dips is not the greatest strategy in the world, but on the other hand, it probably is the best strategy in the world. So I have to think out of both sides of my mind today. So what do we mean by buy the dips? And what it means is that as the price of a stock, a commodity, cryptocurrency, mutual fund, whatever it is, asset, gold, silver, as it moves up in price, it'll move up and then have a dip, move up and then have a dip, and so on. And you want to buy those dips all along the way, and that is the safest way, the least risky way to make an investment into whatever asset you're looking at. And I agree, there's absolutely nothing wrong with it. But if you don't know when that next dip is going to be the little dip before the big one and it crashes, it could spell disaster for you. So what I want to do is explain how you can take advantage of buying the dips and not hurt yourself in the end. If you are a mutual fund investor out there, and there's a company out there called American Funds, and they do an excellent job of educating their clients, the owners of their funds. And one of their marketing pieces is called Larry the Loser. And Larry, just like Larry the Loser says, he doesn't understand the market, he's not smart enough to understand the market, doesn't have time to analyze it, study it, prepare for it, educate himself, doesn't have the time. He just knows if he buys every month or every quarter the same amount of money over time, he'll do well. And they show, over a period of like 10 years where Larry the Loser bought a regular amount of mutual funds, regular dollar amount of mutual funds every month. And he got like 11% over this period of time. And then they showed another guy who stayed up all night, and he used charts and stochastics and algorithms and AI and trading robots and everything to pick the exact perfect time of every month to buy. And over time, you'll see that this guy did much better. He did like 12.5%. So he did, better than Larry the Loser, but compared to the time and effort and energy he put into it, he really didn't do that much better at all. As a side note, if you have a financial advisor who's recommending American Funds, I think you got a good financial advisor. But let's go back to Larry the Loser. Well, Larry the Loser and his strategy works really well in a roaring bull market, kind of like what we've had for the last 10 years. It's just consistently going up. If there is a pullback, it's not for long, and it just eventually marches higher. But there's going to come a point, and what it is, I don't know, but it's probably going to look like something spring of 2008, when the mortgage meltdown hit, or maybe in spring of 2020 when we had that great big fall off of about 30% in just a matter of weeks. You never know when that big one is coming, and it can really hurt you if you decide to buy on the dips, because you could be buying on the dips all the way down. What happens in a bear market? Well, it goes down, then it pops up, goes down, then it pops up, goes down, then it pops up. And if you think you're buying the dips, you think you're smart, you think you're beating the market, you think you have an edge. It lulls you into a false sense of satisfaction that you're a talented, disciplined investor. But in most cases, you're just losing all along the way. That's why I don't like the phrase buy the dips. But on the other hand, there is a good time to use buy the dips. And what you have to do is you have to find an asset that is so out of favor, so unloved, that its outlook couldn't be bleaker. The best way to make wealth is with consistent purchases into an asset where its outlook is bleaker than ever. That's not my wisdom, it's somebody else's. If you know who it is, let me know in the comments. But I'm going to borrow that phrase, it's not mine. But if you're able to make regular, consistent purchases, and if you have the time and energy to try and figure out, when the low is and make your purchase there, go right ahead. But I think if you do that over time, you're going to have much better results. You're going to keep your powder dry. You'll be mostly in cash most of the time. And you give yourself the best chance for gain with the least amount for loss. And the best example of this right now is with uranium. Uranium has been in a dreadful bear market, sideways flat market for about the half-life of some uranium. All right, I can't remember the last time it actually had a good month or a good year. But people who've been buying uranium or uranium stocks or the physical yellow cake itself consistently over time, they're the ones who are going to do the best as this bull market, or at least decent uptrend, is happening. All right, they're the ones that are going to come out of this the best. Making a lump sum purchase when you think it's at a low, and then waiting 5 or 6 years for it to go up 2 or 3% in price, you're going to tear your hair out. You're going to chew your fingernails to the bone. It's not a good idea. But if you can discipline yourself to buy every week, every month, every quarter, if you have the time and energy to calculate when the low is, maybe it's better buying, waiting 2 days before you buy, even better. But those regular consistent purchases on dips could really turn out to be a good thing for you. And this really comes into play when you're dealing with gold, silver, platinum, palladium, right? Because these metals, and especially silver and gold, can go through months and months and months and years, and half a decade of just wiggling right along with no progress at all, and then all of a sudden it pops up 20 or 30%. Rather than trying to make a lump sum purchase and waiting for that 20 or 30%, you're much better off buying on the dips, buying regularly, a little bit at a time, and then it doesn't have to pop 20 or 30% for you to make any money. It might only have to go up 5% from when you started, but you might end up making 10% because of all the times you bought it on a dip. All right, well, that's one strategy you can use for being an investor in precious metals. Investing in precious metals it requires a lot of patience, and it can require a lot of time if you're doing it for the sole purpose of making money. All right, well, thank you for watching Ocotillo Mining Company. If it's not worth owning, we don't sell it.